Amazon has almost no stores. Uber owns almost no cars. And Netflix is not even a television channel. But what do all these companies have in common? A mobile application. This device now plays an active role in all of our daily lives, yet companies still try to sell to the changing consumer using traditional marketing. New Apps identifies the need for businesses to shift their marketing focus. That's why, to increase potential for success in any industry, New Apps is the solution. My name is Annie Law, CEO of New Apps, and as a mobile solutions firm, we take pride in leading our clients into the mobile market and stimulate their growth as well as ours. So, let me tell you a little about New Apps. New Apps, located in Fresh Meadows, New York, was founded in 2012. Since then, we have launched 8 apps. Examples of our successful launches are collaborations with Matchware and Brooklyn Sweet and Savory. Previously an LLC, New Apps is now a C Corporation. As a C Corp, New Apps employees and shareholders will be immune to any legal conflicts and financial liabilities. New Apps' earning potential will also increase based on the positive investor outlook. With $2.3 million in sales projected this year, 22% of our excess cash will be reinvested back into the business, and 30% will be given to our shareholders as dividends. Not only that, but New Apps owns 100% of the mobile market share. New Apps represents the growth of mobile.
Therefore, when you think New Apps, think growth. Our mission is to revolutionize networking and marketing in virtual enterprise. It's a missed opportunity not to expand into the mobile revolution because our mobile solutions and in-app ads prompt growth in the modern technological world. In the short term, we aim to incorporate new technologies, bringing innovation to our clients. Long term, however, my most important goal is to empower female employees in the male-dominated tech industry. We offer workshops throughout the year to promote women in business. With 66% of our leadership team being women, we support the long-term goal of supporting women. Women are our future. In order to shape New Apps, we've developed the CEO management team. It consists of the CEO and the CTO, a dual team. With this dual team, the CTO will maintain New Apps' technical vision, while the CEO will manage New Apps' overall efficiency. With this dual system, we plan to launch 8 apps this year alone. HR makes all of this possible using Slack, a team collaboration app, and the online classroom for professional development. To improve corporate efficiency, however, we use weekly agendas and bi-weekly employee evaluations. Both of these things help support professional development and employee progress. Happy employees also improve efficiency. Thus, we started New Perks. Our New Perks consist of free coffee every morning, up to $3,000 in college credits, and our transportation payment program, which provides all of our employees with free Metro cards from New York City.
New Perks benefits our most valuable strengths, our employees. Our developers have an average of 3 years of industry experience and are comfortable using software such as PhoneGap, which allows easy conversion of programming languages. However, one of our weaknesses is that there's limited office hours. And to combat this, New Apps uses Google Docs and Slack to allow for work to be done anywhere at any time. Potential opportunities are new technologies such as VR and AR. Implementing new technologies will increase sales and attract new clients. However, like all businesses, New Apps does face external threats. However, our developers counter this threat because they have a much more variety of talents, from database to GUI design, and they have a much smaller learning curve than a startup would. Another opportunity is the healthy economy.
The stock market is a leading indicator when it comes to determining the health of the economy. The NASDAQ is heavily populated with tech companies, meaning that it is the prime stock market that New Apps should base our sales off of. In 2010, the price of one share was $975. As of 2017, the share cost $6,891. The NASDAQ is a high populated The NASDAQ is heavily populated with tech companies, meaning that New Apps is basing our sales off the NASDAQ. So retail sales is a great way to analyze a business as well, being that it shows the current spending conditions of each American. Knowing where people spend their money, how they spend their money, and where and when they spend their money is great for all businesses to know to increase their sales. Cyber Monday sales jumped over 17% from last year, generating over $6 billion in consumer spending. This shows how big of a role technology is playing in business-to-business sales and business-to-consumer sales. eMarketer projects that retail sales will remain strong and increase to over $27 trillion by 2020, improving the global economy. New App sees the number of improving businesses interested in expanding into the mobile market will grow as retail sales continue to increase.
It is no doubt that the industry has continued to grow as a result of a healthy economy, and it will continue to grow as more people move to the trend of checking their phone every 15 minutes. Last year, experts predicted that a total of $101 billion would be put into mobile applications by the year 2020. Earlier this year, they revised their predictions to $189 billion, an exponential increase. Along with this, what is advantageous for us is that most app downloads are free, which forces app developers to gain their profits off of in-app advertisements and in-app purchases. In the cases of some apps like Pokemon Go, $2 billion can be made in 2017 alone. Just as important to the real industry is the virtual industry to new apps. We have found within virtual enterprise that traditional forms of marketing are ineffective due to the fact that they cannot effectively reach their target audience. So we firmly know that industries need to find new forms of marketing. Within the 594 firms, 54 of those firms are marketing and software developing firms. We own 12% of the $18 million market share, and we own 100% of the mobile subsection of the market, mobile marketing share. This is because New Apps is an exclusive portal to the mobile market.
While analyzing the mobile industry, we are the only company that fully profiles our clients in the industry they operate in. Summit and Sprouse Design only offer web advertising, which proves that New Apps is creating a brand presence on the most important device of the 21st century. We connect business to consumers 24 hours per day using one click. The best way to connect to consumers is and will continue to be through mobile platforms. Our competitive advantage is clear, but we still need to provide for our clients. Therefore, New Apps has split its app development process into 5 key components. The most important and longest phase is development. This is where Evan and I and the software engineers produce a final product to the client's specification. Once released, user reviews will help the software team improve the app quality and development. Going mobile has never been easier.
Our market segmentation identifies VE business owners as 16 to 19-year-olds who are willing to invest to expand their business. That's why we target those who have been in the business for over 2 years because they can afford the investment. To target this market, our market strategies have to be client-focused. So we developed a marketing strategy around 5 principles.
We changed the 5 P's to the 5 C's. Catering to our customers, cost of success, convenience, communication, and confidence. How do we cater to our clients? The first thing we do is profile our clients, their industry, and their competition. Then we offer them 2 of our products, which is a custom application and a variety of in-app advertisements. The ads can be placed on 3 of our apps, which are VE+, Cryptopedia, and our renovated 2016 VR game. VE Plus is a networking application that allows entrepreneurs to purchase individual in-app advertisements at a much lower price. Communication is a key factor in creating reliable relationships with our clients by explaining why mobile marketing is important to their future success. We do this in 2 key ways. One is promoting our value proposition, which is that new apps can help increase sales through mobile marketing by broadening their market base. Then, our next is at trade shows, where new apps brings iPhones and iPads for clients to interact with our VR games.
Along with communication comes cost of success. Cost of success is simple. The cost of one of our custom applications is $130,000. But compared to the industry standard of $40,000 to $600,000, this is a very fair price considering our relatively quick turnover time. Most of our apps will launch within 1 to 2 months of being ordered, and this allows our clients to find their new customers faster. And along with cost of success comes competence. Competence is incredibly important in new apps because we know our clients see us as competent in the mobile industry. And therefore, it is important that we bring the top software engineers to trade shows so we can assure this impression.
As a tech company, spending too much time and money in the wrong area of growth is a business risk. Example, Snapchat reported loss of $2.2 billion in quarter 3 of 2017. This is because they only have one revenue stream. A poor social media platform with poor augmented reality features. New apps combats this problem by having more than one revenue stream and creating new ventures. New ventures includes growing mobile markets such as AR, VR, and AI. And investments in trade shows. New apps is pushing innovation, but always considers the risk associated.
Although we analyze risk, New Apps is not a risky investment. New Apps, founded in 2012, started off with a loan of $200,000. In that year alone, New Apps paid off that loan and earned a profit of $161,000. As of 2017, New Apps has just slightly over $2 million of cash on the balance sheet. That means in the last 4 years of operations, New Apps has grown an impressive 1,400%. New Apps doesn't see a slow demand in mobile solutions. We see an opportunity for 36% growth in fiscal 2017, ending the year off with just over $3 million in cash. Fiscal 2017 looks promising. To analyze where New Apps breaks even, we developed a ratio based on projected sales on all the products we offer. New Apps, as you can see in the chart, New Apps needs to sell 7.5 units to break even and 10 units throughout the whole year, which is $1.8 million in revenue. Our annual expenses for the year is approximately $1.7 million. As you can see in the chart, total sales revenues deducted from total operating expenses, you get a net profit of $508,000 with a healthy profit margin of 37.85%. In this industry, 37% profit margin truly allows our investors to gain confidence in the growth for our company.
Our dominance in the market continues to show room for growth and a strong return on investment for our investors. With no debt and $3 million in cash by the end of the year, New Apps can reinvest in marketing and new ventures to create a foundation for the future. New Apps is the catalyst for businesses. New Apps.
Making you mobile.
13:30. If I ever hear any of our classes end their pitch with everyone speaking at once, I'm throwing you all out of VE. Let's get that out of the way. You guys knew that from last year. You guys tried that stupid stuff last year too. It's high school and it's cliche. I doubt Julie and Brad are going to say the same thing to Coca-Cola or Chevron or anyone at the same time thinking it's clever. All right? Very disappointed in that. So let's get that out of the way. Before we get to the judges, we have two New Apps presenters in the back who were involved last year in the presentation. Trevor, you have any questions or a critique on the presentation?
I do. I feel like this year, all three firms got it easy from last year. Because all the teams last year, we got fried for our presentations. Maybe it's a good thing you guys did it because you guys are well prepared. But I wanted to talk about your presentation in general. The slideshow, the colors are very dull. That's what I think about it. And I don't think you guys need 7 people. 6 is fine. But overall, you guys did better than we were last year in this like standpoint, and that's like coming from me.
Now hold on. See, here's what's happening now. All three firms are going to leave here feeling themselves a little bit.
That's why.
So I would rather you rip them apart because they don't listen to me enough.
But I almost cried, and that's not good.
So Trev, you got 6 in the country. What do you want?
1.
Trev, can you please do a little harder critique them, please, and not? We'll come back to the judges.
My registry. One thing I was wondering is, is put myself in the shoes of a potential investor. You want me to invest in your company, but your company's doing really well. So I was kind of confused at the end. I'm like, why do you need my money? Because you're so profitable. Like, what are you going to do with mine? Like, at the end, it was like
mid-year bonus.
Like, yeah, how are you going to use that to invest and grow your company? So I was kind of confused why you.
I'm sorry, I don't want to talk. I have some kids that need to get thrown out of here. Do we have a problem? Do I have to write it in crayon so you guys give them the respect that they deserve? I'm sorry, go ahead.
So I think I need more about why you need investors. And I don't know where that goes in the plan, but I don't think it felt like an add-on in the end. It felt like, oh, okay, this is investor meeting, and I have this one sentence about why you should invest.
Now, one of the things on the rubric is, would you invest in this company? And you'll get additional points if they check yes, and then maybe you get a couple, and then if they say no, you get less. So if you guys don't need their money, you need to find a way to phrase it so that way they're willing to invest, but it doesn't seem like an afterthought. But you're right, they're right, you don't need an investment right now. So you have to find a way to put that together. Do you have any suggestions, Brandon?
Well, you could say you guys want to go into VR, so maybe you can focus on that a little bit more and say that the revenue you're bringing in can't support from a
investment
employment standpoint, or you need to hire more people, which is going to cause you net loss that year, which is why you need investors. Something along those lines is what you should be focusing on. Based off what I saw, it seems like you guys are doing well. It's very clear. So you have to focus on the other areas that you talked about. You mentioned when you said Snapchat that they have only one area of revenue, which is why they lost money, but you have 3. So talk about the other 2, because we know you're making money off the one area of revenue right now. So I wanted to hear more about the other 2.
I don't know. Can we go back to you talked about how you've been working since 2012 and you've made 8 apps since then, but in the next year you plan to make 8 apps. And I don't know how you plan on doubling everything you've ever done in just 1 year.
Yeah. So basically this year, our corporate structure, we have put the CTO on top, so we have a dual CEO. And this year we have 11 programmers, the most programmers we've ever had. And it takes 5 programmers to create 1 app, and each app takes 2 to 4 weeks to make, and beta test and everything. So that this year we're projecting to sell 8 apps in our 8 months of operation.
Okay.
With our dual CEO.
So you're doubling up on all of your employees, so maybe that's what you need your investors.
Problem. 11 programmers, 2 teams of 5, one team of 5, 1 team of 6. If it takes you 2 to 4 weeks, that means you're making 2 apps a month. 7 months in the year, you're making 14 apps. So how do you get 8 apps out of that? How's that, guys? Your math sucks. I just heard 2 to 4 weeks from Kenny.
It's 1 to 2 months.
Now you guys have a problem. 0 out of 5 on that question. Annie, why is your director of accounting answering your CEO question, CEO? Answer the question again.
Answer that question.
Answer the question.
So this year, our CTO is at the top of the food chain. So our CTO is actually a very experienced person. He kind of gives us Derek, that's right there. He knows like 14 different languages and like all of that. And he provides the technical vision for the company, so we were able to produce it at a much faster production rate than we did before. That's why we were able to produce 8 apps in 1 year alone.
Hi.
Carl?
I heard in the presentation with the limited office hours, are y'all planning to cut office hours in general?
No, so our class time is where we do our office
You guys are in a class.
Our office hours is only an hour and a half, so that's a really limited time for us to get all of our work done, which is majority of the reason why we all come into the office after the office hours to work on stuff. Not just that, we have Google Docs, we use Slack.
So with the office hour, with the limited office hours, y'all are still working past time?
Yeah, without pay.
Okay, all right. And I got one more thing to say about it. So with the question and answer part, I don't know, with all the teams, y'all just maybe figure out who the best speakers are, and when the question and answer part comes, I think it should be kind of directed to the best speakers maybe should take up for it, or if it's a certain subject and if it's a certain topic in the presentation, whoever's dealing with that topic should just answer it. Because sometimes if someone asks a question, I see y'all look around and not knowing which one is going to speak up for the question. So y'all have to come in and say, all right, y'all have to know when someone asks questions, who's the best speaker for the group, who represents the best.
At the beginning, you guys mentioned that you're very women-oriented and that you have 66% of your population is women. My then concern is, are you being unfair to men? Are you giving women jobs that they don't deserve? Because you're all about the women and men are just kind of like, we don't need you. There's already enough of you in the team.
No, that's not how it is at all.
So guys, the question, to reiterate the question, you're focusing on women, and it seems like you're alienating the other population that you work with. So is the whole focus you guys have on women alienating the men that you have in your business for the sake of promoting women?
No, that's not the case at all. However, we have software developers. We're trying to recruit women, female software developers, because we are a programming and developing company. And the tech industry doesn't necessarily have so many women or the female population. And so we're trying to really combat that stereotype and make a change and be different and unique in that way.
Jade, I want to add to Julio's question about that, because I felt that whole section with like the female employee program and also like the new perks, I felt like the presentation switched from being like a meeting for investors to a meeting for potential employees. Like I felt like that might be interesting to me if I was going to work for the company, but as an investor, I'm like, whatever. Because, you know, I just sort of wanted, I feel like that's sort of your housekeeping and not my housekeeping. Like, you know, if you have these, this is a way for you to retain employees, and that's important to doing that in the tech space, and that's great. I just need to know that you retain employees. I don't need to know all the perks you give, because I'm not working for you.
But I can tell you how that will be important to you. Because as an investor, you want to know how we treat our employees and why what goes on in our office is beneficial and is good, right? So because we have new perks and all these benefits for employees, that shows that we treat them with the utmost respect and we support their drive and their effort. Thus, our company strives and grows in that way.
I think for your presentation now, because what you said I think is important, and that's about employee happiness, which equals retention. Retention equals less employee turnover, which means that you're more productive. You have less training, there's more people developing their skills and stuff like that. I would kind of turn it like, what's the benefit for me as an investor rather than what's the benefit for me as an employer. So, great that you have those things. I would just figure out a way to talk to investors.
Good. All right, Julia or Brandon, do you guys have a question for the programmers? The two programmers up here.
What database are you using?
The two programmers up here, Evan and Manisha.
Sorry, Will, what program are you using?
What program?
Yeah, how are you housing the data?
The question is, how are they housing the data from the apps?
The data we pull from the apps, or like the data of the app, like the code from it. To handle the code of the apps, like the source code, we use storage in private Bitbucket repositories. And to handle the data we collect from the apps, we use Firebase, which is a Google certified database.
Isn't Bitbucket free?
It is, but we're using it over GitHub because it allows you to create private repositories, which is much more secure.
I would switch and tell somebody using like Amazon instead for any repository. I wouldn't tell anybody that you're making investment with it using anything for free. It doesn't put a good taste in anyone's mouth that's investing money into something that may have a security breach, even if you're using GitHub. You know what I mean? Yeah. Like if I told you like, hey, I'm gonna build an app for you and I'm gonna use this free application, like, but you're gonna pay me $140,000, how would you feel?
I feel like you're more buying the skill, you're not buying the technical, you're not buying the technical.
Buying security. When it comes to anything IT related, that's what you're paying for, especially with applications, especially with people's money, buying security at that point. So even though it is a good application to use, I would try and stay away from it. So that could also be something you can add as a cost to your business to try and say like, hey, investors, I need money because of this. Because at this point, you have to look at it from now, you know? Security is a huge issue. I mean, we've all heard that, what was it? Uber got hacked for $100,000, they paid it out, didn't tell anybody. So you don't want like information like that to happen and say like, and the reason it's happening is because security is important, especially in the tech business. So,
good.
Free stuff.
As a VE company, we're using like fake money, so we can't for the programs that we use, we would have to pay out of our own pocket. So
No, I know, but it's not considered a fake company when you're presenting it. You're presenting it as an actual company. So
Put it down as an expense on your balance sheet, just like you guys do anything else. You don't have to use Amazon, is what he's saying. He's saying, but for presentation purposes, put it down as a cost on your balance sheet. All right. So you guys have some. All right. So
One
last thing.
Just the presentation, make sure that you know the size of the screen that you're presenting to, because a lot of your stuff on the right-hand side, your left, is off the screen. So it's kind of distracting when I'm looking at it, how the words are coming off. So just make sure, test it before you start your presentation, because if you need to reduce it or maybe whatever to make that fit in, just make sure you're good with it.
Right. So presentation-wise, both Blueprint and New Apps, your presentation is being cut off. All right. You guys have to notice that before you present. Did you guys notice that before you started? Did you guys notice that? All right. So here's my question: how many people here from New Apps in the audience? Is Dr. Marmer still here? So why the hell didn't you guys say anything? You let your team present with a quarter of their presentation off the screen. Why would you allow that? This is for a competition, and everyone from New Apps here sat and looked at the screen and said, "Looks great. I want a response." Was that rhetorical?
What's the response, guys?
What if you're that thing that is coming off the screen?
Your presentation's coming off the screen.
To be honest, every single one of them was like that.
If I'm part of, if this is my team and I'm not presenting, then I'm watching the blind spots. If anything, I'm even indicating certain things you can pick up on. If I see that presentation's off, I'm gonna go. I would pop up and check over here if there's something off over here. Maybe it's not this. Maybe it's this. So we'll cover each other's back.
We talked about team, right? You guys watch your team up here present, and nobody said anything. Shh.
If I was in their position, I went up on stage, and you know, you gave them a certain type of measurements, whatever. Something could go wrong. It might happen. The screen might go black. I would continue to perform. I would continue to do my presentation as if it didn't go down, and I'll work with any obstacles happen. Gotta get over it, keep on going. Don't let that fluster you, and continue your presentation and do the best you can.
Good. You guys handled it well. My issue is with the rest of the 80 students over here. That's my problem. I don't need a response anymore. You guys had your opportunity to talk. Good. Thank you guys. Give them, go ahead. What?